So with the latest development in the crypto markets, with the latest downturns, it has become time to start thinking about hedging your bets. So this is a video that's going to cover the BITO ETF, which is the Bitcoin Futures ETF, which I've covered in the past before. We're going to be looking at some put strategies in order to protect yourself and possibly even come out with some profit. So without further ado, I'm going to jump into Bitcoin first because that is the underlying asset here. And Bitcoin has quite a downside development setup in place. We're seeing the same thing across many coins, not just Bitcoin, but just to refresh, we have had a three-wave rally since our bottom back in January 24th, which is a bit earlier than most of the altcoins, but we clearly have three waves up. And while we are still in sufficiently, I guess, okay territory for a fourth wave pullback, things are not looking as good in the altcoins, with many of these things honestly too deep for this to be a fourth wave. So we have to prepare for the worst. And the worst would be that this entire thing is an A, B, and a C bounce, a fake out and corrective rally. And since then, we've also had what appears to be 5 waves down. So this is 1, 2, 3, 4, clear 5-wave pattern down. And if we use our extension tool, depending on where you consider the bottom of the 5th wave, this could be a 1-2 that we have in place, which has a sufficiently deep 1-2. So once again, first wave down, second wave that retraced almost 50%, or we may be at the bottom of the first wave now with a bit more of a bounce to come up to 38.2+%. Either way, this is looking like it could easily be considered a first wave down with a second wave to come, or maybe we're already in our second wave. There's many altcoins that are indicating that we may already be in the third wave down. And if that is the case, we're going to fall relatively quick. In Bitcoin specifically, I'm using the big picture chart to give us some lower downside targets. It's been somewhat more robust in the logarithmic view. So this is, again, the big pattern. And we have our third wave top, May of 2021, although Bitcoin topped a little earlier than pretty much any other coin. So April is about where we top. We have what we were calling a fourth wave pullback with the first wave and a second wave. That pattern has not yet invalidated. So despite all the doom and gloom, the green pattern, green and purple, are still primary. The bearish pattern is not yet the primary. So that would be a red pattern that takes us a bit lower. I know the nomenclature is a little different, but the red pattern would have us going down in this box, which would call for some more downside. So far we have what is probably a 1, 2, 3, fourth wave bounce and a fifth wave lower to go. There's confluence within this blue purple box in that if I take this entire thing and the bounce, assuming that's a 3-4, our fifth wave should get to the 0.61 extension generally, and it could extend as far as the 0.764 extension. That was get us right into the top half of this box. Bigger picture, when we look at the supports, we did hit the 1.618 extension for our third wave, just about, not quite. Our B wave expand flat got there. So if that is the case, our support sits at just $24,431. That is the major support. We didn't make it there in the crash during the summer. So if this really is a C wave, it really should get pretty close to that. So therefore, this entire purple box is about where our target is for a lower low. And again, this is not official until we break our low that we hit earlier this year. So once we clear $34,000 and ideally we break below $32,949, that is when the red becomes primary, the downside setup. So that is Bitcoin. Shifting over to BITO, again, the ProShares Bitcoin Strategy ETF. I don't know if I said it right the first time around. This is the chart that I built in our last update, which mimics or at least converts the structure we saw in Bitcoin into BITO. BITO is, of course, an ETF, so it doesn't trade around the clock. And I have to use some conversions. There are some tracking errors, which is expected with any kind of futures-based ETF, such as a GLD or a SLV or anything like that, USO. They all have small tracking errors. BITO is no different, BITO. So with that being said, we have our third wave top back in April of 2021, what we were calling a fourth wave, and then presumably a first wave. That would be the bullish pattern. We are analyzing the red bearish pattern, of course. So that would have this being an A wave down with the B wave fake out bounce. And we are in the midst of completing the fifth wave of a larger C wave. That is what we have here. So where does the hedging come in? Well, here's where we are. So assuming this is a 3 waves down and we've had a fourth wave bounce and our final fifth wave is underway, this red arrow more or less indicates the next movement that we should be seeing. So again, we looked at our short-term picture. We very well may have a 1-2 setup down. It's a bit more clear in other coins. Ethereum, same kind of thing. It's a little sloppy. We may have our 1-2 in place already. Other coins make it a little bit more clear. Dash definitely has something that could be a second wave. And I, in our update on EOS earlier, EOS definitely had a 1-2 setup. So things could get ugly very fast. So I'm sufficiently convinced we have a pretty good downside setup. So in the case of that scenario, how do we play this? Well, we are sitting at 24.94 BITO. That was at market close today. So again, 3 p.m. Central Time, my time. However, Bitcoin has pulled back a little bit since the market close, so it's probably a little bit lower. The conversion factor is 1556. So if you take this number for BITO, multiply times 1556, that's about what the Bitcoin dollar amount is. And you divide your Bitcoin dollar amount by the 1556 conversion to get your BITO equivalent. So that is how I built this chart. So this fifth wave should take us from about 24.94 to as far down as 1915, maybe as far down as 1718. That those targets are based on taking an extension of 3-4, just like I did on the Bitcoin chart. In addition, we have our lower support at 1556. We really should not break that. I wouldn't anticipate that happening, but that is about as low as I would expect BITO to go. So how do we play this? Well, we want to buy some kind of a put option that falls in between. And unfortunately, BITO does not have the best liquidity. So I have come up with a bunch of potential options for options. That's right, pun kind of intended, for June 17th. Otherwise, you have to go much further out. So up to you, but I'm specifically covering June 17th. We are still about a month and a half out from that. So I think that would be sufficient protection for any kind of ensuing crash that we have. And these strikes are based on anything that has sufficient open interest. So for me, my rule of thumb is 1,000 or greater. All of these strikes do have open interest of at least that much. Most of them have 2,000 to 3,000 open interest. So you shouldn't have too much trouble buying and flipping and all that stuff. So our close to the money would be 23. That's for $1.49 a piece. You got your 20s, 67 cents a piece. 18 strike is 37 cents a piece. And I'll let you read the rest. They're all on here. I'm favoring something a bit close to the money. So I will personally very likely be playing the 20 strike. So once again, June 17th, 2022, 20 strike. As of the close of the trading day, they were sitting at about 67 cents. They may be a bit greater once the market opens in the morning because Bitcoin has fallen a bit since then. So again, these are put options. Don't go too crazy shorting. This is more for protection than anything else. I would say that 20 makes sense because again, we're at 25. Our conservative targets are somewhere around about $19 to $18. We're going to fall. That's what this red arrow represents. So you should get at least a 3x return, assuming no uptick in your implied volatility. So really minimum 3x return if we do fall down. So again, if you are a speculative trader, that could be a nice little short play to make. But again, this is mainly to hedge if you have any holdings. If you do short and make some money, that could be an opportunity to buy some more Bitcoin or any other altcoin for that matter. Just another way to raise cash. A little dangerous. We do have stop out points we must set up. So going back to our BITO short-term, Bitcoin short-term chart, we did have our invalidation point right at 48,326. So if we actually do rally all the way up there, that would be a good time to stop yourself out. What is that in BITO? Let's take a quick look at this. So our rally top was right at 30.27. Now, you might be thinking that's going to be a lot of loss if it goes that high. Feel free to set your stop wherever it makes the most sense. These are hedge puts for the most part. So really, if we break that 30.27, then I'm probably going to sell at that point, stop out, something like that. There's also a chance I wait for that rally to finish. And then we have our next pullback. So maybe something like this. If we get our fifth wave up, we have our 1, 2, 3, 4. Let's assume we get our fifth wave up. I would expect a pullback all the way down relatively sharply for the second wave. So that could be a better opportunity to dump any kind of puts you have that were for hedges, something like that. That's what a second wave would look like. Expected to be relatively low because it is a diagonal setup. So there you have it. Don't go too crazy with this. The best way to protect yourself is reduce your positions in your coin holdings. However, for whatever you have left, doesn't hurt to use BITO ETFs, BITO ETF puts to hedge yourself. I'll be very likely using 20 strike puts for June 17th. So let me know what you think. If you have any better ideas, anything I overlooked, subscribe so that you don't miss any updates I have to make. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy hedging.